The Internal Revenue Service says you owe a lot of money to Uncle Sam. A lot of money. So, are you on the hook forever, or is there a time limit for the IRS to collect? I'm Jim Flauaus. As an enrolled agent, I'm authorized by the U.S. Treasury to represent taxpayers before the Internal Revenue Service in all 50 states. Although it's not widely shared by the IRS, there is a 10-year time limit for them to collect tax debt. If they don't collect it within 10 years, the debt is expunged. It's gone, poof. But like everything else with the IRS or federal law, it's not quite that simple. So here's what you need to know about when the clock starts, how you can stop the clock unknowingly, which you don't want to do, and how to use the statute of collection rules to your advantage. So, when does the clock start? The clock starts on the assessment date for the return. Say it's a 2015 tax debt. Most people would just automatically conclude that 10 years later, in 2024, the debt is no longer collectible. But that's not exactly how it works. If you filed the 2015 return in 2016, and maybe you even got an extension because you wanted to delay the filing, it might be late 2016 before that return is finally filed, processed by the IRS, and assessed. So 10 years from that would be the end of 2025, not the end of 2024. Now, what many taxpayers unknowingly do is stop the clock or temporarily put it on pause. In tax speak, we call this tolling the statute. In other words, there's a 10-year statute of limitations. You can actually pause or toll the statute by doing certain actions. And let's go through what some of those are. If you receive assessment letters from the IRS and then you file a request or an appeal for a hearing, what often is called a collection due process or a CDP hearing, the time from when you ask for the hearing until the hearing is done and ruled on, that period of time, which can be months, actually tolls the statute. If you file an offer in compromise, that stops temporarily the statute of limitations. Now, temporarily isn't really the word here because most people don't understand. When you submit an offer in compromise, it can take the IRS 6 months, 12 months or more to process it. Right now it's running about 12 months. So you've got a full year there where the statute of limitations is not running. If you apply for an installment agreement, the time it takes the IRS to accept and approve the agreement, that's a period where the clock stops. Here's another one where maybe you hadn't thought about this, but sometimes you get into an installment agreement and for whatever reason, you don't keep the terms of the agreement. Maybe you don't make the payments, you don't file on time, somehow the IRS terminates the installment agreement. That will toll the statute. Think about it. You enter into an installment agreement. Why? Because you will make payments, but the IRS also agrees that they will not take enforcement action. They won't levy your bank account, garnish your wages, seize property. So as long as you keep the terms of the agreement, so will they. If the terms of the agreement are not kept by you, then guess what? The IRS has the right to stop the collection clock from running and, of course, take enforcement action as they wish until you get back into compliance or back into another installment agreement. Here's a couple of other ways you can toll the statute. If you're out of the country for 6 months or more, that will stop the clock. If you're in the military and you're on deferment because you're out of the country and on your assignment, that will also stop the collection statute of limitations from running. There may be years where you didn't file. You're actually waiting to file because you think that's going to extend the time period before the IRS begins collections. Not so fast, my friend. In these cases, the IRS can actually step in because income is reported to them by W-2s, 1099s. They will file a substitute return for you. Waiting to file only adds to the penalties and interest, which are on top of the tax that's accruing. Waiting is not an effective strategy. One other note. The collection statute expiration date, as we've explained, starts on the assessment date, but that date is sometimes in dispute. The taxpayer should establish right from the jump what the collection statute expiration date is with the IRS when they start getting collection notices. Why? Because the IRS has different ways of calculating it. Let's not assume that every IRS staff member is experienced and knows how to calculate it properly. Many times the staff is new, they're untrained, and, well, they're getting on-the-job training on your case. So, Make sure you establish the CSED date, and even better, find a professional that can help you. Tax professionals like myself know how to calculate the CSED, and we can help you to establish what is the proper date in your case. You probably wouldn't go to court without a lawyer, and if your balance due to the IRS is significant, you probably don't want to go to the IRS without representation either. We can help you end IRS stress, perhaps even settle your debt for less than you owe the IRS. Just give me a call. My phone number is below in the description to this video. My email is there as well. Contact me either way, and let's see what we can do. I offer a free tax relief strategy consult to any taxpayer who's in trouble with the IRS and looking for a way to handle it with wisdom and get this behind them. I'm Jim Flauaus. That's it for this time. If you found some value in this video, please hit the like button, and I'll see you next time.